What are the major supply and demand levels for the SPY? Today was the August options expiration, and we want to know where option dealers are positioned going into the end of August and into the September options expiration. So let's take a look at the gamma exposure data and see what it's telling us. If we look at the price action on the SPY for the past few weeks, the market has really sold off almost 6% just recently, slicing through the trend line here in blue that goes all the way back to March. Basically, ever since the March options expiration, for the last 5 months, we've been in a steady uptrend. And you can see there's a number of open gaps here in the price action that have yet to be filled. We sliced right through the uptrend line yesterday, and today was kind of a confirmation of that trend line break. There's a potential for a move back up into the top of that trend line. We'll see what happens come next week after market participants reposition themselves in the options market after today's options expiration. If we just take a look at the SPY's total gamma exposure, we opened today with just over negative 3 billion in total gamma, and you can see the big negative concentration here at the 430 and 435 level. We closed right around 436.50, so right around these two large negative gamma concentrations, which is typical, especially on the big option expiration dates. And so a lot of this negative total gamma is going to be rolling off after today's expiration. And so it really depends on how market participants reposition themselves next week to determine whether we're going to have a strong bounce higher or whether we're going to continue moving lower. So if we just take a look at current positioning in the market, we can see that a lot of this gamma is rolling off today. As I mentioned, August 18th, the 435, the 433, 430, all of that gamma is rolling off. And this is the big negative drag on the market that's really pulled the market down yesterday and today, was from all this put buying that was taking place over the last few days, culminating in the sell-off Thursday and Friday. All of that's going to roll off, though. We still have some negative gamma here at 430 on the September 15th expiration, but you can see here that we also have some positive gamma that's pretty large here at the 460, 455, and the 450, all expiring September 15th. Just a side note, if you guys are looking to incorporate gamma exposure analysis into your trading or investing, we've got a free trial to our dashboard. I'll put a link down in the description below. You can access all of our gamma exposure data. We also have our community Discord, our model options portfolio, as well as a lot of other goodies as well that are included in the free trial, so be sure to check that out. So we're really at the lower end of this kind of gamma concentration here for the September 15th expiration. We've got 425 and 430, some big concentrations here, and then we've got the 450 to 460 range. And so really it's going to depend on how all of these market participants that were positioned here, how they reposition into the September 15th expiration. So after the majority of these puts expire here at the 430 and 435 level, that's going to give an opportunity for a potential bounce in the market. You can see we're very negatively skewed here. After opening lower today, we actually bounced up through the day, closing the open gap that was left from the morning open. And so there is a lot of support here in this 430 to 435 zone, as we saw here in our gamma exposure data graph in these big concentration levels. So the early part of next week is a decent probability chance for a bounce, potentially back into the zero gamma level. Currently is at 445. Next week could be probably somewhere in the 440 to 445 range, somewhere in that zone, which kind of makes sense. That's really where the sell-off picked up steam over the last couple of days. That's also coinciding with the range that would result from a tag back up to this trend line going all the way back to March. That range between 440 and 444 could be a potential bounce target. Oftentimes, that's what you see after the big monthly options expirations. You see kind of a clearing of the deck, and it gives room for a little bit of price retracement in the opposite direction of the previous trend. So we're kind of looking for that possibility next week. Longer term, if we just zoom in into our 3D model, we can see that there is growing positioning down here at 430, 415, 410, even 400 into the October and November timeframe. So if more put buyers come into these levels, then we're going to see price forced down, which is about 10% lower than we're at right now. So over the next couple of months, we need to really be watching the volume and open interest at those levels, because as time goes on and as price potentially moves down to those levels, those gamma concentrations are going to grow very large. And so those could act as potential magnets for price over the coming months if bearishness continues. For the next month going into the September options expiration, this 450 to 460 range is still in play. I know it's extremely negative right now, but these ranges are still in play on the SPY. So if there's any momentum bounce after next week, this could act as a potential magnet for price as a lot of this negative gamma is rolling off. And so we can see this is a big wide range. And so I don't want to discount the probability that there's a potential move back up into this 450 to 460 zone, because this gamma is still sitting here. It just looks really small because it's dwarfed by all the negative gamma that's currently in the market this week. Don't forget, we also have this open gap here. And so that would be a really nice fill if price was to bounce back up, fill this gap in the trading range, and target those gamma exposure levels. And by the way, if you want to know a little bit more about how gamma exposure works, here's a link to a video I put out a few months back, kind of just introductory concepts to what gamma is, how option dealers use gamma. So definitely check that out when you get a chance. If you're interested in checking out some of our gamma exposure tools, including our dashboard, our 3D surface model, as well as our gamma data graphs, you can head on over to our website. On the homepage, there's a start your free trial now button. Sign up for a 1-month free trial, check out our service, join us in our Discord. I'll put a link down in the description below. Thanks so much for watching, everybody. I'll see you guys in the next video.